Good morning, everyone. I wanted to do a quick video on a question that I get asked all the time. How many contracts should I be trading? That is a question that I get all the time, and it's not really an answer that is a cookie cutter answer that's going to be right for every single trader. The number of contracts that you're comfortably willing to trade or able to trade is going to be different than maybe the number I'm going to trade or somebody who's just starting out. So it's going to be different for everybody, but it's pretty simple to determine. What I do is recommend, first of all, whatever setups you're comfortable with, you're going to sim trade until you're consistently winning and doing well in sim. Then and only then are you going to start trading your live account. And this is my opinion. Some people don't recommend trading a sim account, but anything that's going to help you practice and hone your skill, I think, is important. So spending time in front of your screen, looking at your charts, sim trading, and then when you are profitable in sim, as I just said, then start with one contract. Then once you're consistent with one contract, then you can start adding to the mix. So once you get to the point where you're adding to the number of contracts you're trading, this is a really simple way to figure out how many you should be trading. So regardless of the size of the account that you're trading, whether it's a $5,000 account, a $50,000 account, first you have to determine how much you personally are willing to lose per trade. Then what's your stop? How much are you risking per contract if you should get stopped out? Now, a lot of people don't really figure this out. If they get stopped out, how much are they going to lose? Everybody's always looking at it from the other aspect. How much am I going to make? How much am I going to make? Well, how much are you going to lose if you get stopped out? So once you determine how much you're willing to lose per trade, how much you're going to lose based on your stop that you're using, now all you have to do is divide the amount that you're willing to lose per trade by the amount that you lose on one contract if you're stopped out. It's that simple. So here's an example. So on the NQ, let's say using a 3-point stop, that equals $60 per contract that you'll be risking if you should be stopped out. So then you have to determine what's the maximum amount that you're willing to lose per trade. So let's just say somebody's willing to lose $200 per trade. So now you simply divide the 200 by the 60 and you get 3.33. So the number of contracts that you're going to trade are 3. So this way, if you get stopped out, you're still within your personal guidelines on the amount that you're willing to risk per trade. I don't personally have a percentage that I'm willing to lose per trade. I don't feel comfortable with that. I'm more comfortable in determining how much I'm willing to lose per trade. And what I mean by percentage, like the number that you see thrown around out there very often is not to risk more than 2% of your account. Now, for somebody trading a $5,000 account, that would mean they would be risking $100 per trade. Now, if somebody was trading a $50,000 account, that would mean $1,000 per trade they would be risking. So somebody with a $50,000 account may not be comfortable risking $1,000. So just because you see that number thrown around out there at 2% doesn't mean that that is the perfect formula, because it's not. Only you can determine what that is based on your trading plan and your risk tolerance. So I hope that helps, and you can always shoot me an email. If you want more information about what I do, you can go to www.easyemintrade.com. Have a great day, everybody.